Domains really are the digital real estate of the internet. You take that revenue, you create that asset, you bring it on chain. When it comes on chain, you can then generate revenues from renewals, from registrations, but also think about leasing, think about fractionalizing your domain name like a chat.com into 10,000 or a million pieces.
OpenAI just paid $50 million for chat.com.
Domains are actually billion-dollar plus generating machines.
Hello and welcome. And we're here at Holistic Investments, and I'm your host, Constantin Kogan. And I'm delighted to have an amazing guest today, as Fred Hsu. He is a co-founder and CEO of D3. Hi, Fred.
Hi, Constantin. Thanks for having me.
Thanks for being here. I know that you're now in south of Italy, enjoying the time with your family, but we're going to talk about things you've built so far. And, it's an amazing project that you already created. It's an honor to be here with you. And before we jump into your story, I also want to throw traditionally that this content is for informational purposes only. You should not construe any such information or any other material as legal, tax, investment, financial, or any other advice. Now we can talk about the origin of D3. I mean, I know it's hard to make it short, but can you give us like a 30-year flashback? How did you, from UCLA student to grad, to multiple other education and, courses that you have obtained to helping run the world's largest domain portfolios, and what epiphany led you to start D3?
Sure. So the story of domain names in my career goes back to the early 2000s. I graduated with a computer science degree from UCLA down in California. It was just about the time when digital or domain names started to become like a thing, like digital real estate. So my first company, called Oversea, we ended up managing about 40 million domain names, generating billions of dollars with partners like Google, Yahoo, VeriSign. That kind of gave me the front seat in terms of the economy, the domain economy, essentially the internet's naming layer. After doing about a couple more companies, one in Web2 and also one in Web3 across the West Coast, started coming up with the idea behind D3 in 2022. At that time, we started noticing that Web3 started to create what they considered to be Web3 domains. And we kind of had common knowledge within this industry that in 2026 or thereabouts, which is just coming up around the corner, there's going to be another round of ICANN auctions coming up, ICANN application window, in which the new extensions like dot something, dot Kogan, dot Fred, whatever, dot near, dot sol, etc., get created. So we thought, you know what, let's kind of do two things. Let's kind of fix this namespace first and also prepare communities for the next round of ICANN applications coming up.
Nice. Now jumping into the modern, I would say, DomainFi economy. That's how you call it, which I love the concept. It's the first time I've actually DomainFi. I was also one of those guys who were arbitraging domains in the beginning, right? So on GoDaddy and then before the Namecheap, right? So what, in your opinion, you're building the first ever blockchain for DomainFi, to tokenize world domains and to unlock access to another liquidity and distribution. But I think a lot of the people who are coming from Web2 experience, it's still very new for them. So maybe you can explain the main value proposition behind this democratization.
Yeah, great question. So domain financialization, or what we call DomainFi, is pretty obvious to us. We've come from the domain industry for decades collectively. A little bit about domains. Yes, sure, everybody visits Amazon.com, or if you want to go to ChatGPT, now you can go to like chat.com. You almost don't think about it. Even on the Web3 side, you go to an exchange. First thing you do is you do 2FA. Make sure the URL says thisexchange.com or do a 2FA. It's just pre-wired into everybody's brain. But beyond that, behind that, sort of the domain economy, domains are actually billion-dollar plus generating annual yield machines, right? There's hundreds of millions of these domain names like .com, .ai, .xyz that constantly get renewed and registered every year. So it is kind of brings the best of utility and sort of recurring SaaS revenue. There's companies like Google and GoDaddy, VeriSign. These guys generate billions annually. In fact, I think VeriSign's actually they run the .com registry. They actually are the most profitable company on Wall Street. In fact, recently Warren Buffett announced that he was buying up to 20% of the company. So long story short, domains are a great digital first native asset that nobody ever really has thought about in the kind of scale we've been thinking about, especially now for Web3. So again, you take that revenue, you keep that asset, you bring it on chain. When it comes on chain, you can then generate revenues from renewals, from registrations, but also think about leasing, think about fractionalizing your domain name like a chat.com into 10,000 or a million pieces, right? Similar to yield-bearing instruments in traditional commercial real estate, digital and global. That makes sense.
Yeah. So that makes a lot of sense. So as you mentioned, they generate renewable fees, releasing income, like, parking revenue, so to speak. But if you were to kind of quantify the native cash flow and how the regular users can benefit from it, right? So because before that, right, I was going to, let's say, GoDaddy, and the only thing I have like is, okay, I've seen a particular trend, I did my research, and I see this domain can cost, more expensive later, like in maybe a few years or a few months, right? And I can build some SEO value behind it, and that's how we resell it. That's how I actually resold several domains in my career, right? Now, what has changed and what evolution you see how people who are participating in this new economy, DomainFi, they can earn money with you?
Well, domains, you bring up a good point about making money by actually building it out, attaching some SEO to it, driving what we call organic traffic. That's been a method that's been tried and true for probably a couple, 2 or 3 decades now. So, I mean, good for you. I'm very proud of you. You seem like a very savvy domainer. The other way to make money is to basically do what we call parking. About 20 years ago, I created a patent in the United States and Europe, kind of inventing domain parking. So the whole idea is put some ads, links that usually go to search engines like Google on your site, or put a little for sale button sign. No different than putting a for sale sign in your house. You click on a button, you go maybe to like a GoDaddy page that says, would you like to contact this person, or maybe contact a broker? And then maybe they will help facilitate a transaction. It'll be slow, it'll be expensive. They'll only take fiat, right? But you can buy or sell the domain name. And so to answer your question, that all kind of constitutes what has been historically and currently is monetizing a domain name. What you don't have is you don't have borrowing and lending protocols building on domain names yet, right? You don't have like true leasing. Imagine I wanted to rent your domain name for a year or 5 years or 10 years, or maybe I wanted to use email from your domain. You can keep the land, but maybe you want to keep the land rights to me for a period of time, no different than if I owned a farm or a collective of properties. Domains really are the digital real estate of the internet.
So in other words, you can make money by just like, also leasing it as to someone else. And one of the myths, like I like with biggest myths, like, that people link like ENS, like, that equals to domain. What's I would say like just for layman terms, like, consideration, like hard difference between the wallet usernames and the DNS assets that you are tokenizing.
Yeah, about a few minutes ago, I talked about the explosion of these Web3 domains going back 4 or 5 years ago. That's what's initially caught me on to kind of thinking about how to create solutions around this space. ENS is basically what they call an alt root. So the ENS or Ethereum name service, they run this Web3 extension called ETFs. It doesn't actually work in your browser. It probably never will. The three-letter country code .eth is actually owned by the country of Ethiopia, which also runs .et. So unless there are geopolitical forces at play that are much stronger than me and probably the entire domain industry combined, .eth will probably stay a Web3 naming convention for a period. I don't have anything bad to say about ENS. I think they're a great, strong Web3 community. There's just under, I think, 2.8 million of these name registrations, and they've built this sort of on-chain resolution following. And we like the guys too, but they're not domain names in the legal or DNS sense, right? They live entirely within Web3, so you can't use it for email, you can't use it for apps without going through a special SDK integration. You can't use it for SEO like you used to do. As opposed to domain names like a .ai or Amazon.com, they are globally recognized, they're legally governed, they're interoperable with everything. All 5 billion devices in the world can utilize a domain name for web, email, payments, 2FA. So think about, and of course, they support wallet addresses and Web3 resolution, which most people don't think about. So Domain names are an all-in-one Web 1, Web 2, and Web 3 identity, whereas ENS is a Web 3 identity.
And you mentioned in one of your speeches, I was listening that, something like authoritative tokenization, right? So I love the concept and I wanted to specify exactly like the legal root of title matter. Like, for example, if you want real liquidity, what are the steps and how should people understand it?
Yeah, well, what we mean by authoritative tokenization, and again, I realize that every terminology within the past 5 to 10 years in Web3 is kind of recently made up. Authoritative tokenization to us really just means that your ownership of your domain name is rooted in an actual DNS registry, such as .com for VeriSign or .xyz from the Gen XYZ company. It's not a copy, it's not a wrapper. They're not what we call fake domains or alt roots. It's just like real estate. If you have a property, it's likely going to be certified by a title in terms of what's on your title. It's likely going to be registered at the city, county, or federal level, right? And there's only one entity that can really title your piece of property, not two entities. So that's all we mean. There's got to be a governing authority over your digital property, just like real estate. Only when that happens can people trust it, right? You cannot buy, sell, fractionalize, borrow, collateralize a piece of property that you cannot trust is actually titled to be like yours without 5 or 10 different liens on it or without a question of it actually existing, right? So D3 helps provide that legal certainty through that word that we call authoritative tokenization.
Beautiful. And then we've seen some of the latest success, I would say, like good signals in the industry that OpenAI just paid like $50 million for chat.com. So, in your opinion, as an expert in this industry, what does this transaction actually means for TradFi, for RWAs or entire crypto?
Yeah, I think it's awesome. It's the convergence now of AI, OpenAI just buying chat.com, real internet, people realizing that .coms, for example, are still the gold standard for online property. I mean, chat.com was even purchased and flipped by one of our investors at D3, a guy named Dharmesh Shah, who's also running a project called Agent.ai, and who I think co-founded a company called HubSpot, which is a huge giant out there, right? And I think that the price I think I read was that they sold it to OpenAI was actually $30 million plus. And I think that price signals how much brands value, authority and reach, right? It's not just sort of like a domain name. You're buying like the front door to a trusted access point. Your front door, I mean, Amazon, everybody goes to Amazon.com to buy their stuff or use the Amazon application, right? So that level of trust, reach just cannot be disputed. Same thing for, Binance.com, the Web3 world, right? There's one Binance.com. Everybody knows it. Everybody knows how to get to it. All browsers support it. For TradeFi, it also kind of traditional finance, I think that purchase of chat.com also validated domains, obviously as premium yield generating real world assets, right? I'm sure 5, 10 years ago, the value of chat.com was probably less than 3 million, right? And in all this speculation and increase in the value of this real estate, there wasn't a tokenomics involved. There wasn't a creative Web3 marketing going on. People just kind of knew that it would ride the trend of something completely non-Web3, which is AI, to eventually generate that type of cash flow.
Yeah. And this is fascinating because not only like we're talking about the potential just to buy and sell, which is essentially flipping, what I think that would be very important for you to clarify for our listeners that, for example, if you own chat.com or travel.ai or any other like, expensive elite domains, like how soon could, let's say, one can post that asset, as you mentioned, as a collateral? Because then essentially what you're also allowing eventually to borrow stable coins, like, or maybe to sell fractional shares of this domain.
Yeah, in short, it starts with tokenizing your domain. But you need to know why. Why would I want to tokenize my domain? Why would I want to create an MLS number on my piece of real estate, right? We are working to help people tokenize on DOMA, which is the blockchain that we're launching and we're a core contributor of. We'll handle the rest, right? So once you tokenize it, that tokenized asset can then be plugged into DeFi apps for collateralization, for leasing, lease to own, fractionalizing into millions of pieces potentially, right? So we've created these rails for instant liquidity from these DNS anchored assets, right? But it starts with tokenization on DOMA.
Now, I love people use the word of devil's advocate. I prefer angel's advocate, right? But if I'm gonna play angel's advocate, like, and we're for a second, we'll try to wear shoes of a final customer who's buying fractional piece of, let's say, chat.com. Let's imagine chat.com was tokenized on DOMA, right? $50 million asset. And me as a final user, what is the upside? What is the benefit for me to purchase, let's say, $10,000 worth of chat.com?
Well, obviously, I'm not offering any investment advice, and everybody should do their own research. But if I trust that a home really exists, I might want to put in $5 if I could into that property. And maybe one day, OpenAI will be worth $1 trillion. And maybe if there are revenue or sort of appreciation rights or some sort of mechanism that would assist in appreciation of my $5 chunk of chat.com or eventually of OpenAI, then maybe it's worth holding and maybe it's worth speculating over. Or maybe I just want to own a cool piece of history, right? Because it's just chat.com. I know people have this retail mindset as well in the investment markets. So it's no different than how we used to think about buying and flipping premium domains back in the day. We were stuck with buying. We bought 20 years ago, we purchased like a domain name called compare.com.
Oh,
It's a pretty generic word. It's funny. 15 years later, I see compare.com on a TV commercial. I was like, oh, that's interesting. Just started like it as a domain domain name in my account. Same thing with information.com, blow.com. One of my friends recently sold fuse.com, FUSE.com for $2.1 million. And he held it for a few years and he bought it for six figures, right? Who knows what these properties will be used for eventually, but they could represent huge businesses. And there's just a lot of reasons, I'd say, to own regular real estate. And for those reasons, one might also want to own pieces of digital real estate as well.
so essentially, it is a way to enter the economy and the potential of appreciation to an asset that you wouldn't be able to acquire otherwise, right? So for the owner of this domain, it's an instant liquidity. So he gets like at least partially liquidity from the people who purchase it. You don't have to sell it completely. Similar to if you would, if REITs or similar if you would sell a publicly traded company, you don't sell everything, right? You sell part of it, like some parts of the share. So yeah, I mean that is actually a very interesting point, and just to be clear, that did not exist before, right? For now, before what you are talking about, like, there's no other option to purchase like a small piece of a domain, correct?
There have been clunky implementations of it. I think during the NFT craze days, one of our investors, and he's actually the world's biggest domain broker, purchased. He sold the first domain name on Rally Road for $1 million, I think. He fractionalized it, but from what I hear, and Rally Road, I understand, was an NFT marketplace where you could divide these little pieces and sell them off as little NFTs. My understanding is that process was fairly complicated. And it was probably a little too early years back, right? But yes, to answer your question, if you wanted to buy a piece of something, previously you had to deal with the whole asset, right? You couldn't just sort of, sell it little pieces and fractions efficiently and settle instantly, for example, like with stablecoin. So I think we are at the convergence and the timing is right for the retail owner to own bits and pieces of domain names. And right, like why not, right?
Yeah. No,
As
it's
long as the tech is there.
100%. And that's actually beautiful transition. That's my next question is actually about the tech flow, right? Because maybe in a simplified way, walk us through the flow of the registration. Because first you need to register in D3, then you somehow have to obtain the DOMA token, right? And then it goes to more of an open market, like DeFi marketplace. And then I mean, we need to debug, like, to understand like where the ICANN, like on a Solana or any other L2, which plug into this place. So maybe try to simplify this flow for a regular user.
Yeah, I'll try to explain it in one, two, three easiness as much as I can. So imagine one day, I don't know if you for your previous domains you used, I don't know, maybe like Squarespace or Google Domains or GoDaddy or Namecheap or one of those. But let's just imagine you just go to your registrar one day, you click on a button that says tokenize it. Second is you then want to maybe sell to Web3, or maybe you want to, package it up into a bundle to sell to Web3. Just like you're trying to sell something like eBay or whatnot, right? At that point, you've also defined your wallet address. The world of DeFi, the world of Web3 will find a market. It'll find a buyer, and you'll get money into your wallet. It's as easy as that, right? Your domain will likely still be held and custodialized at that registrar, which is why DOMA chain integrated registrars are a critical component to what we do. We're not trying to compete against Namecheap or Google. We're not trying to say that .coms are going to be taken over by something else. In fact, we totally embrace the fact that chat.com and .coms out there can and should be the internet standard, the gold standard for this asset class. So take your best .com and just go to your registrar, you tokenize it, you set your price, you get your money. That's as easy as I can just define the process should be in the upcoming months. And then once it's there, to answer your other question, like once it's in DeFi land, whether people from Solana or the Ethereum or L2s or the base ecosystems want to come and bid, that'll all depend on what we plan to be a healthy ecosystem of apps, right? Once there's this valuable piece of real estate that has been tokenized, then all the derivative stuff, apps, derivative tokens, etc., can then be built off it. But it starts with tokenization first and foremost. You got to bring your supply to the market before the grand bazaar, is open.
Yeah. And I love your mission and one of the statements that you've made, that make domains great again. So you're serving as a bridge between the people who are trying to come from Web2 world and simplify the user experience to make it more seamless and intuitive, right? Which I love because I think we're all missing this in our industry, and that's is super important. Now, coming back to the also one of your presentations you mentioned a bit about GTLD, Land Rush. So first of all, explain us what do you mean by that? And you mentioned that specifically by 2026, around the GTLD round, once in a generation Land Rush, right? And you talked about the mechanics, why DAOs should care now, not in 24 months. So if you can elaborate on this, this is a very interesting thought process. I want people to learn more from you.
Yeah. So a little bit of history of the internet namespace, and I'll try to go quick on this one. .coms and .nets and .orgs were all created back in the early 90s, right? It's been almost 30 plus 35 years, right? Then after that, in the early 2000s, there were some country codes that got delegated, right? Like .co, which is Colombia, .me, which is Montenegro, and even .ai, which is the Caribbean island of Anguilla, right? GTLD. Then in 2012, there was something called the GTLD round by ICANN. ICANN is the nonprofit multi-stakeholder organization that governs the internet, right? Domain names, DNS, IP addresses, working with IANA. They're like a 400-ish person nonprofit that manages this stuff. 2012 was the first time in the history of the internet that they created what's called a generic top-level domain land rush. So at that time, companies like Google came in and created .app. Companies like Donuts, now known as the Identity Digital, came in and created extensions like .network or .cash or .finance, right? If you scroll forward 13 years later, we're now coming across the second time in the history of the internet, and perhaps even the last one, we don't know, where they're going to do another one of these rounds. Why it's important is because now in about 9 months, all these orgs are preparing, and we're helping some of the largest Web3 companies, foundations, ecosystems apply for their generic top-level domain. Let's just take, for example, Solana. We'll be helping Solana create .sol and also .solana. If they don't apply, someone else would get it, right? And getting a TLD like this, a top-level domain, is like buying country's central real estate, right? It's like generational IP. The hurdles are very high, right? There's non-refundable fees in the hundreds of thousands. You have to provide 100% uptime. I'm not even talking about 99.999939 of ability. I'm talking 100%. Not many people can provide 100% uptime throughout there. There's annual audits, there's full background checks. It's a very, very invasive process. So without a partner like D3, most DAOs or Web3 ecosystems won't make it, right? And there's going to be heavy competition, just like in 2012. Where Google bought, like I said, .app for $25 million, and GMO purchased .shop for $42 million, I believe. And the biggest one was Network Solutions that bought .web for $130 million. And it's still not launched. So this whole land rush process coming up is actually a pivotal moment. And I think it's a forcing function to kind of get these Web3 organizations, frankly, FOMOing in.
And I think that's an incredible outlook that, if you can elaborate on this, like the DAOs and TLDs, because let's say I'm a, Shiba Inu or Pirate Nation community, like, fan, right? So can we launch, let's say, .shib or .pirate as a real DNS TLD, like, and govern renewables, like an on-chain treasury?
Yeah, I mean, I think the intent is if you want to do it and you find the right partners to help you do it, you can absolutely do it, right? As long as you abide by the ICANN rule book, right? You can't allow cyber squatting like Amazon.shiv. You can't do things that are anti-establishment in a lot of cases, right? Long story short, you can't really do this as easily without working with a company like us. Launching a TLD requires proven track records, regulatory compliance, a team that knows all about DNS infrastructure at global scale. We help kind of make that possible. So we're the experts at marrying the DNS system with Web3 governance. But absolutely, anybody can apply. Let's just be honest. But again, if you can't go through the right motions, it's gonna be kind of a wasted effort, and you're gonna lose several $100,000 through a non-refundable application fee. And there's gonna be heavy competition. So I would advise people to look into the right help, of course.
Yeah, which is, I would say simply contacting you and, trying to get like a professional partnership, which helps because those are the multi-billion dollar foundations. But for smaller startups, let's say like even if we want to, talk about like on a personal brand level, there's a lot of people who are trying to, let's say, commoditize their own brand, right? And identity. For example, today, if I would have, let's say, Fred.Soul or Fred.BTC, right? Because I'm a big fan of yours, right? So how does the D3 kill this silo problem and give users one canonical identity?
We do it through the DNS system. The DNS plumbing, thankfully, is already there, supports wallet addresses just as much as website and email, and setting up your DNS TXT records to verify that like you truly own the domain name. Like Google may ask you to put this little thing, this little unique code in your DNS. Same thing with Zoom if you truly want to run like a subdomain .zoom.com, right? Like that has already been there, and it's been there since the 90s. We don't need to reinvent it. So essentially, to answer your question, like a .sol, a .btc, just as much as a .com can resolve already under one umbrella using the DNS system at the root, right? So just it's like connecting your passports, your driver's license, your crypto keys, your public keys, of course, not your private keys, to a single verified like domain name record. That's the promise of DNS, and bring this stuff on chain. In our opinion, one identity, many chains, like no silos.
But then another, I would say, challenge is social engineering. You mentioned it very briefly, but let's talk about also, I would say, more challenging scenarios. Like names, like they can be like, there's many Constantines, many Freds in the world, right? So we live in a world where whoever is faster and smarter, like, they can actually like, pinpoint this particular domain, they can own it. And that means whoever wants to go after and try to, let's imagine you patented your name, right? But I was just faster to register it for whatever reason, right? Then it becomes a little bit more of a complex issue who actually owns the, intellectual property rights. So how do you help people to deal with those challenges?
So IP and trademark infringement is actually runs core to running an ICANN accredited registrar and a registry. You have to abide by international IP laws. For example, if I registered Amazon.xyz or Amazon.shib
Mhm.
instantaneously, that domain name would be marked as cyber squatting because we all know Amazon owns that domain name, and the registrar will take that domain name and take it from this offending registrant, the owner, and literally put it into the account of Amazon. So the system, which again is made up of 200 plus governments, works. It is rather bureaucratic, but it's the closest thing to a functioning, healthy, ROI positive, profitable, decentralized org. In many cases, even more functioning than like, a Web3 orgs in a lot of ways. But you also bring up a good point, which is like I have kids, for example, all the .coms are taken, right? If they can buy whatever name they want as long as it's not infringing on a trademark name or brand or company. If they want to use it for personal identity, they can choose kid1.sol. Another kid can choose kid.sol or kid.shib or kid.btc. Like we don't, these extensions at least gives more alternatives to people who are frustrated that all the good identities are kind of like taken, right? In that sense, it's good for the internet to, in our opinion, to create some of these extensions.
Yeah, and then you can be very creative, I would say, like, which allows you because before, as you mentioned before, like the the .com was one of the most important, one of the most like well-established extensions. Right now we have more DeFi oriented .fi or like XYZ AI, which is ironically not many people know that it belongs to an island, right? So, but what like I'm curious to hear your opinion also on the future of when AI agents will govern a lot of like wallets and they will pay for APIs and you don't even need your identity, like, additionally, because your tokenized DNS names and like, maybe an ID in the future will be already your identity. So do you see some threats which maybe like down to 3 to 5 years down the line that we don't notice now?
Yeah, I think one threat might just be if there's too many kind of custom agentic systems and protocols talking to each other, then it can cause quite a bit of confusion. My view is, or I can just give the entire world of agents the global standard, which is the DNS, which already works, right? And I think that agents talking to humans and humans talking to agents, you need to have kind of a verifiable human readable address, right? I know people have been talking about various protocol agent to agent and stuff, and okay, fine, that's going to be the future of Sky or whatever. As long as you have the human like interplay in between, in our opinion, it makes for a good case to have agents use a domain name, and even if it means a subdomain, right? Accountant.fredshu.com or bookkeeper.fredshu.com or analyst.fredshu.com can all be kind of contacted and communicate through the DNS system, either using what's called a second level domain name, like a fredshu.com, or even like a subdomain, like I mentioned, subdomain.fredshu.com. That way, we have these human readable addresses across apps, across chains, all using the DNS, right? So tokenized DNS is good for systems like that, right? Because they're globally unique. There's going to be only one agent123.com out there. It's already integrated to the infrastructure, like just like those DNS, TXT records I mentioned to you that you may use for Google or Zoom or DKIM or SPF or email and much more. They can carry this kind of programmable metadata right in the DNS. So just like websites became the face of brands, domain names can become the face of agents in short.
That's actually a good point, so if we would actually ground it to a degree like of okay, three concrete ways how a listener can plug it in today, how they work can, basically utilize D3 as an investor, as a builder, and as let's say community lead.
Sure, investors, builders, and community lead. For investors, I think that investors should back, in our opinion, the protocols and maybe even the registries that are fueling the tokenization of DNS, right? These are, like I said before, annual cash flowing businesses with, VeriSign being the most profitable company on Wall Street with Warren Buffett buying up as much shares as he can. They're cash flow machines with upside, and none of that has been basically brought on chain yet. So that's my view from an investor's perspective. From a builder's perspective, you can use Doma's API and SDKs to create, wallets, apps, identity solutions that are plugged into these tokenized DNS, DeFi protocols, borrowing lending protocols, marketplaces, you name it, right? As a builder. And I think that from a community perspective, community leads, right? You can help your DAO, you can help your project launch a TLD. Like SHIB, I was just speaking yesterday with the CEO of SHIB, a undoxed guy named Shitoshi, brilliant guy, right? Right. And he's very, very excited about kind of furthering the .SHIB TLD and applying with us, in the round next year, or even .anime, which we announced that we're working with Anime Coin to launch, and right, and it's going to be meant to be, I believe, governed on chain. So that's where we can help these DAOs and these communities with that land rush.
And then specifically, probably it's more geared to the builders, but maybe you have some other programs and like to incentivize. Do you have any grant programs or any other incentivization ideas how to help them?
Yes, just for your listeners, we do have a program coming up early. It's very early, but I'm happy to announce it's going to be called the DOMA Forge,
Mhm.
right? It's going to be a seven-figure plus grant program just for builders to build on top of DOMA. So we'll make some of those announcements closer to ETH Can, which is just coming up in 2 weeks. But yes, definitely builder programs to incentivize and build awareness, and us to kind of bring them hopefully more visibility, more technical guidance, and of course pair them with potentially investors and such.
Exciting. That's amazing. And I'm honored that we are well, talking about it as one of the first people to know. Now, let's maybe like dream a little bit. Like let's imagine that D3 becomes this the new standard in the DomainFi world, right? And let's talk about 2030. Like what would it look like in terms of like the perfect scenario in your vision, like how the domains will be traded, how will be tokenized, what will the world be like?
Yeah, yeah. By 2030, it'll already have been a few years since the second GTLD round has been launched. There'll probably be, I'm guessing, 1,000 plus more generic top level domains launched by that time. I think we're going to see a world where if D3 wins, I think we're going to see a world in 2030 where like the internet will look like a borderless nation, where things like identity and ownership and payments and even like agentic communications, even like reputation as well, is all rooted in DNS and these interoperable access points using domain names, and also on every chain and every app. Right. So that's selfishly how we think D3 and DOMA could look like by 2030 if the internet forms the way that we think it can and should.
I hope it's not if, it's when. And by the way, I don't think it's selfishly. Like if you will help people to actually monetize it, you will help people to minimize the costs, and that will actually bring a much better user experience. So that actually will be very like now selfless on the opposite. But
Fingers crossed. Fingers crossed,
yes.
man. Like my kids are always, I mean, they're using like their school email addresses that have to still even a long address, right?
Yeah.
Them and AI agents can take advantage, in my opinion, of this better infrastructure coming out.
Well, if we talk about the reality of the story, like today, the premium domain deals, like, I was trying to actually bid for one of the deals. It takes 4 to 8 weeks, and the brokers came like, sometimes like from 10 to 30%, which is, in my opinion, is a little bit too much. Now, in the Domainify like checkout, I would say like experience, how do you see this? Like, how, like, let's talk about numbers. How you minimize the fees? And in terms of the time, how do you minimize the experience from point A to point Z?
Yeah, good question. So just like as I mentioned, I think half an hour or so ago, we're trying to make it one, two, three easy for the user. So just imagine like a Amazon style checkout for domain names, right? You can tokenize, you first tokenize, then you buy or lease or finance one with one click, or maybe two or three clicks, right? Once the domain names are fully tokenized on DOMA. At that point, you don't have these complicated human networks of brokers. You don't have these escrow delays. You're not complaining about like, hey, do you take fiat or PayPal or cows or chickens or stablecoin? It's just like, okay, no, just if you can settle, if there's the willingness to settle, certainly from the Web3 and pay in stablecoin, you should accept it, which means that a transaction should finish in under a minute. And to your fees question, all four are less than 5%, which is a much cheaper proposition,
For sure.
one that's meant to I think bring a lot more liquidity to this ecosystem than relying on that 20 to 30% human broker to broker interaction.
Yeah, and you mentioned also like there's talking about the fractional mechanics. So obviously we see it's cheaper, but let's say like have like someone who's trying to experience the first fractional sale. You're planning to legal wrapper, custody on chain, like token. But let's imagine you have already a good domain, whether it's going to be, I don't know, information.com, rainbow.com, and people throw bids on you, right? What's the realistic annual return, let's say, when a token holder can start collecting like additional returns on top of what they're already selling?
Yeah, I mean, I have several friends who own more than, a million domain names, and they're constantly buying these names or renewing them for $10 and they're flipping them for 120 bucks.
Mhm.
That is way more than just, a 6% treasury yield, which is on chain, or it's way better than even a 10 to 12% Bitcoin staking yield. in a lot of ways, right? So if baskets of those domains were created and they have the characteristics to provide a continual yield like this, then I think that it should be considered probably when weighing against other digital first assets. Now, I'm not talking about real estate or physical and stuff because that's not really what domains are. But once they can be priced properly, then I think that the range of returns can be easily 20 to 30%, depending on the type of buyers and traffics that some of these domain names can bring, right? And monetization of these names can happen, from day one,
Hmm.
right? Once the DNS resolves, right? And even token holders, in our opinion, can receive pro rata revenue or distributions, maybe even streamed daily, weekly, monthly, right? That includes the sale of the domain name as well. If they flip to like Sam Altman as well for a premium domain, for example.
Yeah. And who are those appraisers? Like who actually like an auditing whatever the price should be?
Yeah, the best appraisal systems, or I'll switch on my Web3 lingo, the best pricing oracles. The best pricing oracle data are really just a lot of the old school domain portfolio holders that have owned and traded millions of domain names before. They have this huge repository, right, of data that's just waiting to kind of get to market. What you'll find from us is helping bring those data sources on market. So not just like one pricing and appraisal engine, but maybe several, so that users can make their own decision when buying or investing in these tokenized assets.
Beautiful. And then what you basically mention in terms of basketizing those domains, so you foresee, let's say, an opportunity that a big collector, right, can maybe take 100 domains, package them together, and use it almost like an ETF, right, to sell it like as in bulk, as opposed to selling each domain one by one, correct?
Yes, I'll do that. I'll say that because I used to do that at my first company, domain company. We created a bunch of different LLCs, and each LLC owned a bunch of .coms and some .nets and stuff, and it was constantly monetizing. And we would just repackage these portfolios by selling or doing creative things with these underlying LLCs back in the day. We didn't have blockchain 20, years ago, but like now we do. All we're doing is taking that paper method and bring it to the world of Web3 today, right? But yeah, baskets, ETFs, how you want to look at it, it's just like putting together a portfolio and
Yeah.
taking a portfolio approach.
Yeah. So I think that's itself by itself also a very unique opportunity which people haven't had before. So talking about like, like liquidity and the opportunity to cash out faster, right? So liquidity needs data, right? Now will D3 publish a live domain price index or Oracle? If so, then when?
Yep. Over the coming months, we'll be working with a lot of these pricing providers and providing pricing feeds through an Oracle, making them available on chain. We're kind of think about it like we're building the framework for many Bloomberg terminals in a sense for domain names, right? So live pricing, leasing data, lease yield data, perhaps resale comps, right? All syndicated to apps built on the this network of DeFi protocols, right? Think about the real estate market in the United States that has like Zillow and Redfin and Realtor.com, right? Same kind of idea for these digital assets.
And in terms of execution, maybe now I will ask you a controversial question. So what's the single biggest execution risk still on your whiteboard?
Yeah, I would say education to traditional finance and Web3 people alike that domains aren't these like boring, non-exciting assets just because they don't have like a Pepe meme frog or something, or the fact that there's not usually 100x leverage, they're not gambling instruments, right? And I think that people are coming back down to earth about, real revenues, real businesses coming on chain. So education's key, making sure that they understand these are battle tested, multi-decade, proven real world assets with built-in utility too. The SEC has never come down on domain names before because domain names are the thing that powers your email addresses, that power 2FA and webs, right? Monkey JPEGs different, and I don't get me wrong, I love my monkey JPEGs, right? But domain names are a very very different asset class altogether. So the
Yeah.
tech is ready, but the market education is definitely like our long game on execution risk.
Yeah, and I remember one of the speeches you mentioned that you've called domains the OG NFTs, because structurally there are, from what I understand, again, you're biased, but like you think that they're better than BJPEGs, right? Which are NFTs.
Yeah, Yeah, just like homes. Like every home is unique,
Mm.
right? It takes up a very unique XYZ coordinate on this earth, right? And every home is also different. Just like a domain name is always going to be unique. In that sense, they're like NFTs. Unlike NFTs, they haven't sort of seen this rise and crash. It's always been a steady incline of domain names ever since the 90s and early 2000s. I think back in the 2000s, there's something like 180 to 120 million domains, and now there's about 368 million domain names. So it is a growing asset class.
Yeah, that's huge, obviously. And to monetize, even to have to process few millions on as a recurring monthly, subscription basis, that's a huge business. So yeah, so you're becoming like an on-chain GoDaddy, but even bigger and better because it's also a marketplace, which can be like providing lending and borrowing capabilities. None of the existing Web2, let's say, competitors are doing that, right? So yeah, I can see how it can become really, really big. I want to try something fun with you, Fred. I've never done this before, so
Sure.
it's more of a lightning round, right? So just try to answer like very intuitively from what you remember, right? So the first one question is first domain you ever bought, year and price.
Fredshoe.com. I bought it in something like 1998 for $12 because back then, as a poor student, identity for me was critical, and it was available. Fredshoe.com.
Have you sold it?
No, I use it for my personal identity still.
Okay. Most
I wouldn't
underrated.
sell for $1 million. Okay,
Good to
maybe $1
know.
million
Okay, so
dollars,
if
but
anyone wants to bid too, please contact Fred. Now, most underrated TLD right now.
.ai definitely underpriced given the wave of AI agents coming.
Cryptometric you check every morning.
I check Hyperliquid's trading fee revenue, and I check to see how Hype tokens doing. Right, I think there's over a billion of annualized revenue coming paid daily on chain. So that like I use that to get a pulse about like how crypto's thinking about real revenues flowing into DeFi. You know what I mean? As opposed to these 3,3 Ponzi schemes, et cetera, Olympus DAO, et cetera.
Yeah. One regulation you'd erase with a magic wand.
I would love to see the 30% tax that Google and Apple are taking, sort of federally, maybe globally mandated to be removed. I think it's a private toll on the digital economy, and I think it stifles independent app app innovation.
Yeah, it's like technocratic feudalism in a way. So, a book or a blog or a podcast that every founder should read or listen.
Because I've done 3+ companies now, all have been, I think, decently successful. I go back to fundamentals. I would read Good to Great by Jim Collins. It's a red book cover. It breaks down how disciplined teams and flywheel execution and relentless focus can kind of drive these kind of like average-ish or normally maybe like an average startup to something like great or like a category leader.
Beautiful. Yeah, it's a great book. Mainnet launch date, you'll stake your ENS on.
I'll say months, not quarters.
Okay. Well, and the last question, which is more of a personal question, I never notify my guest about it, but I think it's a very important one. We all do what we do for a reason, for a purpose, right? So I want to know what is the main reason for you? What is the meaning of life for you, Fred?
The meaning of life for me is, as a father of three boys, is to raise three happy, independent, productive men. I'm getting a little bit older now, so I'm thinking about the next generation already. So call me speaking about a little bit too loud, but they've got to make an impact on the world, one that's positive, because I'm a family guy. That's my thing.
Beautiful. No, that's again, very selfless goal, and I really admire it. I have only two, but they share this a lot. And if like anyone want to find you, right, so where is the best place? Are you more often on Twitter or LinkedIn or email?
Oh yeah, I'm on Twitter. It's hey Fred, Hey Fred. You can also reach me at email. It's fred@d3.com.
Yeah, I mean, we'll share all obviously in the description of this video, like all the credentials. Really appreciate what you're building, Fred. I think like this is truly revolutionary, like in ND3, and I would really want to see you like in 5 years to implement all the ambitious plans that you have, right? I'm really looking forward to see your mainnet and that you will accomplish everything that you've started. Thank you so much for your wisdom.
Thank you, Constantine. It's great having me. Thank you. Appreciate it.
Thank you.